I'm going to start. This is GC, and this is the monthly chart. Okay. The high in 2011, I've got as a cycle degree wave 3. We've got this A, B, C structure into the 2016, early 2016, late 2015 low. Okay, that can be this 4, but we didn't get to the 38.2 retrace. That's the retrace based on the move from the bottom of the 2 to the top of the 3. That's at 969. The 50% retrace in GC is at 784, and that's more in line with the 4 of 1 lesser degree. So I don't think this 4 here is in, okay, which makes that move down more likely to be an A wave. We got a clear 5-wave move up into the 2016 high, and therefore that is in the A or a 1. But I'm not going to go with the uber bullish count to gold 5,000, and there's no need to from a trader's point of view either, unless and until the damn thing proves itself. The next thing against it, so the things against us going straight up in a 3 are the fact we didn't hit the 38.2 retrace fib on the way down. The next thing is that after this 5-wave move, we've had this. Now this has taken too long for a wave 2. If you read the Frost and Pretcher book and read the section that no one bothers to read or take note of or half the time, and I've summarized it in the Elliott Wave tutorial section within education on the site, the characteristic that we expect of each wave. Wave 2s are often deep and they tend to be fairly swift, okay, and this has not been either of those, okay, and particularly if you look at the metals, this has all the hallmarks to me of a B wave, and I'm not even convinced at this point that where I've got this B here, I'm not convinced that's the B. I think it could be the A of it, B of it, and if we break 1150 in GC, 1149 I think it is, but I'll show you when we get down to the lower time frames, then I think that the lower targets that I had a long time ago, 1110, are quite possible, and that this B here is not yet in. After all of that, I only expect GC to come up here. I'm looking for a very, very high C wave to 1796, which would be the 887 retrace of that move down. And the reason I'm looking for that is typical of GC and silver as well, to give very, very deep retraces that look very much like double tops and double bottoms. But the other thing is, and this goes back to what I showed you yesterday with looking forward and putting fibs on your chart from different levels to give you levels of confluence. If we go, if the 2016 low holds, which I am fairly confident that it will at this point in time, and then we go up here to the 887 retrace for this B wave, then we get an equal move down to this move down to the 1.0. It lines up almost to the penny with the 38.2 retrace. That's using long scale fibs over a long time frame, okay, and that's what I think we're going to see in metals and what we're going to see in the miners in all probability. From a trader's perspective, you've got to look at when you're trading, and when you look at the psychology of trading, you have to map your thinking to the market. The market is not going to change to suit you. You have to change to take advantage of what the market gives you. And The idea of buy and hold, everyone wants to buy the bottom and hold on to the bitter end to the top and make a fortune. It doesn't make sense. You could have bought, and I know that a number of you did buy this low, particularly in the miners, and I know a number of people that have been holding it all the way through this. Making money, you know, you can give your money to an investment manager, he'll lose it for you that way, and he'll charge you for the privilege. Making money is about trading the moves, and that was the move. And despite what many say, this is an area to sit out and not be involved in, and therefore to look for the likely levels here to make a sensible risk to reward ratio. And it's not just about risk to reward ratios. You've heard people say there's a 10-to-1 risk to reward ratio available here, and I've seen people post this on the ES. I saw someone might post, you could risk 70 points to make 400 here. That's evidently someone who's not trading, because 70 points in ES futures is enough to bankrupt most people, even with quite a small stake. So you've got to temper that risk reward to your capital and how much you are using for your investment and positioning. So from a trader's point of view, we do want to trade this move up from a sensible level. And all we're looking for now is to say, well, okay, what's the most likely level coming down? So lectures on trading aside, let's then come down the time frames and look at the chart. This is the weekly chart now. And if that's the B wave there, it did just about get to the 764 retrace, close enough to actually call that a hit. But the things against it being a B wave are this move up can only be counted as a 1 as a leading diagonal. Leading diagonals and diagonals of any form as a directional move are far, far less reliable than an impulse, because there is ambiguity in a diagonal. Is it a diagonal directional move, or is it an ABC or a double zigzag or all the other different types of corrective? And there is nothing to differentiate the two. So that's one minus in terms of adding up the pieces of the jigsaw and making sensible decisions. The next thing is that we've got an A, B, C, and this made a higher high than this. So we now got a diagonal and an expanded move. Expanded move, guess what? I think that the idea of expanded flats was shoved in the book by Elliott because he couldn't come up with something better, and it gives Elliotticians a lovely way out when they can't work out the count. And more often than not, when you put them on a chart early, later on with reflection and the benefit of more price action, you realize that they weren't an expanded flat, they were something else altogether. And the something else altogether in this case would be that you've got an A, B, C, so a double zigzag, and that's an A down, that's a B back, and we're coming lower, and we're going to take this low out here, in which case we're going to 1110, 1110, and possibly slightly lower. And this move that we're seeing down now here, bear in mind we often get extensions in the fifth wave in metals, not the third wave. If we get a 4 and an extended fifth, we will take out 1124 and we will come lower in the metals down to at least 1110 and possibly lower than that. So that's what I'm looking at in GC. Coming down then the time scales, daily chart. Staying with the idea, just bear with me a moment, that this is an expanded flat for an A, B, GC. Again, what doesn't matter here is what that is at this precise moment in time from a trader's point of view. What we do know is this is an impulse down. That is perfectly clear, and that it is not, in all probability, complete. The chances of this being complete are very, very low. Taking each subwave, and as I come down the timescales, you'll see I've fibbed out and labelled every last subwave in this move in GC, which is why I haven't got to do all the others and give you all the details yet. There are 5 clear waves down to here. There's a 2 back to here. There's 5 clear waves to here, a 2. Then this third subwave here gets murky. And I'm not convinced that the way I've got this labelled, I've got this as the 3. We had a precise hit at yesterday's low, or the overnight low, on the 1764 Fibonacci extension. Length of this one measured off this 2, orange labelling, orange fibs, minute degree of trend. Okay, this could be this 3 here only. So we get 2 more 4-5s rather than just 1 more 4-5 to the downside. Okay, in both scenarios, the 4 should come now to at least 1197.5 and a maximum of 1228 to 1230. And then we're going to get another low. Now, in order for the 1-2, this one here, and therefore this is a 2, the C of 2 down, in order for that to remain valid, we have to stay over 1124 on this next move down. Okay, the 2.0 extension, which is the minimum we need to see, minimum for 5 waves, lines up perfectly with the 886 back. That's the retrace of the length of this wave 1 off its origin. That is at 1149.2, and the 2.0 is at 1149.2 on the nose. Okay, so therefore we were reliant on this count on GC only hitting the 2.0 extension in the wave 5 position. Possible, not likely. And I suspect what we're going to get from here, and I'm going to be watching for, is a 4. I do think we'll come down and hit that 1150, and I think it's more likely the bottom of the 3. And then we'll go up again, and then we'll tank. We'll get the washout down to 1110 or lower. Okay. Now, again, how to trade this? Personally, I'm not prepared to go long based off yesterday's low. I want more than that to prove it. I'm not in a rush to get in. I'm really not in a rush to lose money. I'm really not in a rush to risk money, and I'm really not in a rush to join the crowd of people that have done just that. I am more than happy to miss the first part of the move and give it a bigger stop loss on a pullback, with the added benefit of knowing that I've got a confirmed low in place. Okay, so that's the first thing to say to you. But in terms of trading it, I'm as sure as what I can be that we're going to get at least 1 more move down in a 5th. And if I see a fib above 1124.3, so I want 1149 and 1131.2 is the other possibility. If I see one of those hit and hold, then I will take a shot to the long side, and that will give me an extraordinarily tight stop loss. And I will be getting my stop to entry and taking some off as we approach this region again. Okay, and if I get washed out, then I'll make a little money. I won't lose any money, and we'll look at what happens next and fib the next subwave down to see where the low may be. So sorry that's so long-winded, but it gives you all the nuances. Now, if you go to the site and look under GC, you will find that I have updated all of the, so the charts you're seeing here now, I've updated them this morning about half an hour ago. They are these charts. Coming down to the 4-hour time frame, I've added all the subwaves in so far. There's the 5. It hit the 223.6 of its local subwave and the 1764 of the next degree of trend up. There's the blue box for the 4. I think we've got an A in place. These fibs are what we need to see hold. So 1178 through 1172 for a B. Take the 764 out and it becomes more probable we're going lower. The next 2 levels lower are these 2 fibs through and these 2 fibs on the 4-hour chart. So that's the next region of support that you can look for. 1149.6 through 1161.2. All that's on that chart for you. Now, 1-hour time frame. Okay. There you can see the next lot of fibs down for this subwave here. Here's my dilemma on the 3. Excuse me. And any dilemmas mean that you've got to be less certain about the count. That's the 4. That's a 5, which means I'm relying on a 1, 2, 3, A, B, C, D, E, 1, 2, 3, 4, 5. That is not a well-proportioned wave, which questions this, and means that this here can move to here, and I'm off a degree of trend on the lower time frames. Ergo, we are going lower than these counts are showing at this point in time. Okay. At the moment, I think we've got potentially the A wave in here. We could get another push up still to 1193 today, but then I'm looking for this B. There's those retrace fibs. There's the area for the C of 4 that we're looking for on the hourly time frame, and then I've added the 15-minute time frame as well, showing you the last subwave fibs here. So off this 4, there's the 1, there's the 2, 1, 2, 3, 4, 5 for the 3, 4, 1, 2, 3, 4, 5. We hit the 238.2 of this subwave on the nose. The 3 hit the 138.2, which is quite common in metals. And that subwave does fib out perfectly, which suggests it is complete. We've also, in this subwave, taken out the level of this 4. We've not quite taken out the top of the 1, but having taken this area out, and the 1.0 and the 764 and spiked over the 618, all the evidence says that is a local low with a completed subwave into it. What I can tell you is it is either all of the 3 or it is the 3 of 3. I'm pretty damn sure it's not all of the 5. Okay, if I'm wrong, we'll know and we will find a sensible place to get in. Okay. So that's what I've got in GC. I haven't got that level of detail that's current and up to date after yesterday's price action on silver and GDX and the individual miners. By this time tomorrow I will, and during the course of the afternoon I'll have silver and the GDX and the GDXJ done for you, and we'll go through them later and I'll record it for you and put it on the site. Okay,